Hello, everyone. Great to have you all here. Welcome to the first edition of Blockchain for Europe's webinar series. Today we discuss the future of the digital euro. And before maybe I start introducing our distinguished speakers today, I just want to highlight that we will have a poll which we'll launch in the next seconds, which we would like you to participate in. And we will quickly discuss before we go into Q&A later today. And secondly, if you have any questions once the Q&A session starts, please raise your hands. We'll try to lift you to the floor and let you ask your question yourself to our two panelists today. Saying that, I would like to introduce our two panelists today. Ulrich Bindseil, which probably a lot of you already know, he's the Director General for Financial Market Infrastructure and Payments of an entity called the European Central Bank. And Philipp Sandner, who's the head of the Blockchain Center of the Frankfurt School of Finance. Thanks for being here, both of you. We very much appreciate you taking the time and talk about this super important issue. And to start the discussion, I would like to give the floor to Ulrich to maybe quickly outline in a couple of minutes the status quo of how the ECB is considering this huge endeavor. What's the progress being made? What's the discussion on the ground? And then we can directly go into the debate. So Ulrich, the floor is yours. You're still on mute. So
yeah, thanks, Robert. Hello, everyone. It's a pleasure to be here. So ECB working on CBDC in a few words. In December, ECB made a number of announcements or published in particular one 3-page note, which you can find on its website, a note to the EFC, which outlines a bit what it thinks about retail payments in Europe and the role of that CBDC could take in the future. That makes two links, namely one to the ability of the European payment industry to come up with an efficient retail payment solution. And second, with the evolution of the use of banknotes in the euro area. And the point that you can extract from this that the ECB wants to make is that currently maybe it doesn't see yet the conditions fulfilled to decide we need CBDC. But if banknote usage would, let's say, decline further or at the end disappear, and if at the same time the European retail payment industry would fail to, let's say, offer a pan-European payment solution, retail payment solution under European governance, then maybe there's a case for CBDC. Then also in December, our president, Madame Lagarde, announced that there would be a task force in the Eurosystem task force to work on CBDC. So that task force is currently working indeed. And as also recently mentioned by our board member, Mr. Mersch, this task force should deliver a report in the summer to the decision-making bodies. And on that basis, the decision-making bodies will give guidance on where we want to go, how ambitious we want to be, again, what scenarios would trigger the launch of the CBDC project. And then probably also, you know, something will be published by the council, because everybody's curious to hear where the ECB is going. In the meantime, there are not so many news. So in terms of maybe mentioning one other publication, the ECB also in December published a paper called Exploring Anonymity in Central Bank Digital Currencies, discussing, you know, this anonymity issue. I mean, I myself published a working paper in January, but that's more a working paper. It's not an official ECB paper where I come up with some ideas how to address financial stability issues. That would be all as an introduction.
thank you, Ulrich. By the way, we already launched the poll, so for the ones who haven't participated yet, please feel free to do so. Thanks for the intro. And Philipp, I know that you're working on this for quite a while. I mean, especially in Germany, you're a household figure on this already. So you're views are very highly valued, and we also hope that you could give us the pleasure of explaining a bit, how do you see the digital euro unfolding in the future? What do you see as the biggest opportunities? What the biggest, potentially also further down the line, what the biggest risks are from your perspective, and why we should or should not have maybe a retail digital euro version of it? So please, floor is yours.
Yes, thank you very much. Yeah, my name is Philipp Sandner. I quickly present myself. I have founded a blockchain center at the Frankfurt School of Finance. That's a university in Frankfurt. It's a good university, actually, even though it's not that well known, because we don't have like a 500-year-old history like the University of Heidelberg, for example. Not everybody knows the Frankfurt School, therefore, but it's a small and tiny, fine university focusing on finance, business economics, and also computer science. And from the blockchain center perspective, we are focusing on everything which is spanning cryptocurrencies. That's Bitcoin and Ethereum, basically on the left-hand side, and then the digital euro on the right-hand side. And the digital euro is, in my mind, one of the key aspects for the future, as a backing for industrial usages in the future. That's mobility, manufacturing, Industry 4.0, logistics, supply chain management. Then secondly, for cross-border payments, the reason is here, why do you need the digital euro? Because you could easily transfer the euro from here to, say, Tokyo or to Seoul, end to end, you know, like from me, Philip, to some other guy in South Korea, within a couple of seconds. You know, that's massive. That's not possible by now. End to end, the same would be true for emerging countries and developing countries, where payment channels right now are such that payment sometimes needs at least hours, sometimes but days, and sometimes weeks. So speed could be higher. The usage would be there from the industrial side. And then especially in Germany, where we have very many machinery companies, it's very, very important to think about how digital transformation of manufacturing and operations will happen in the future. This will lead to the so-called machine economy, and it will also lead to the situation that machines are not just connected to the internet, but such that machines, like things, are also starting engaging in payment transactions. And the best example for is that you will have an autonomous car, which you today call taxi. So we will book a taxi ride, but there will not be a human being there, which we will pay. And this car is then driving, for example, through a toll station in Italy, needs to pay €8.50. And then the car as a thing is paying the toll station as a thing money. So that's why credit cards cannot be used anymore, because suddenly you have a thing-to-thing payment, machine-to-machine payment. And that's exactly where it gets exciting, because right now we feel that the blockchain would be the best infrastructure. And there are other reasons which we can explore, but I think these are the two main reasons why the blockchain euro makes sense. And then let me close this introductory statement with 2-3 seconds. We will talk about blockchain, yes, but in case we will talk about blockchain, then typically we mean DLT as the larger technology family. My opinion is pretty clear here. The future euro, the future securities, the future currencies, they will run on a DLT platform, on a blockchain platform. There is no other way around. China is investigating this, Sweden is investigating this. So the question whether blockchain is the right technology is, in my mind, already answered. There are hundreds of studies here which are proving this point. Then second, blockchain is not necessarily transparency. You can also have private transactions like cash. You know, if I'm paying somebody physical cash, then these transactions cannot be observed by any government because it's physical money which I'm moving around. You can have the same private transactions with technological means. So blockchain does not necessarily mean that it's transparent and that the government and the central bank can look in all transactions. That's very important, because very often people are mixing up things here, because of course Bitcoin is transparent. The digital euro does not necessarily need to be as transparent as Bitcoin. Then one more remark. I think the biggest bottleneck right now is education. If you talk to politicians, people in public administration, in companies, banks, corporations, very often it's not really understood what the digital euro is, why it would make sense, and why it's needed. So there is a very, very big bottleneck in the area of education here. And finally, the question is always, in my mind, who would basically produce this digital euro? And very often people are pointing towards the ECB that they should do it. And actually, yes, they are doing payment infrastructure, but also I think it's pretty well known that typically innovation is not coming from public authorities, but rather from private institutions in the very beginning. And therefore, I think we should also in this discussion look who might actually be the originator of innovative payment solutions in the very beginning. And in my mind, this need to be private companies, even though it's then not for the entire sector, but maybe only for a sub-sector. You know, PayPal also works. N26 as a bank, Revolut as a bank, you know, they all have brilliant payment solutions, and that's in compliance with all regulatory rules. It's in compliance with the central bank's rules, but it's still issued by the private sector, and therefore I think we should dig into this direction first. Yeah, I hope this wasn't too long, Robert, but that's I think these were some of the points and definitions I wanted to make in the beginning. Also clearly saying that if we talk about blockchain, then we do not mean Bitcoin. We're talking about DLT as the wider technology family.
I think that was a very comprehensive, short overview. Thanks for that, Philipp. Very appreciated. I can imagine that Ulrich already has some ideas for responses, so I don't want to stop you from commenting on that, because the idea really is, you know, for you two to discuss this with us having the pleasure to listening to it. So please feel free to shoot. So go ahead.
Yeah, no, those were a lot of interesting points by Philipp. So thanks. And that, you know, I don't take personally that you said that innovations don't come necessarily best from the public sector. That's totally fine, and I would agree with that. So the question is, but at the same time, I mean, you say this should be central bank money. So that's a bit here the magic thing to do, that it is central bank money, but distributed in various forms and, let's say, programmed in a certain way by private sector. And you know, you are right, finding then the right governance and technology to bring those two worlds together, that would be very, very important, of course. I mean, of course, there are a number of other issues. So, I mean, first to say, I think the Swedes and also the ECB, the central bankers in general, I mean, they make this distinction between wholesale CBDC and retail CBDC, whereby when they talk about the wholesale, they mean CBDC available for the financial sector, let's say, for banks in particular. And when they talk about retail, they mean more for citizens, let's say. So you are emphasizing the corporate payment in between, and there you see a lot of benefits in terms of programmable money, etc. I mean, obviously, a retail CBDC, even if central banks have in mind here the citizens, would also be open, of course, to corporate usage. And I think the central banks would be fine, you know, to leave it, you know, to a kind of innovative ecosystem of payment system providers to innovate in whatever way they want, of course, subject to a full control of the quantity of circulating central bank money. So that is obvious that one always needs totally secure technical solutions to prevent the undue creation of central bank money. I mean, of course, still, my impression, Philipp, is that the credit risk assigned to commercial bank money for payment purposes is not so high. So in principle, you know, there's ample space. I mean, assuming that central banks refuse at the end to issue central bank digital currency, there's a lot of space for the private sector to innovate as well, and to you know, come up with solutions like the one you were mentioning. Machine-to-machine payment is really not something where you absolutely need central bank money, in particular not for retail payment users, you know, like the car, passing a toll and having to pay. I think this is, you know, also possible with private money for sure. I mean, the ECB, that's why the ECB was also making a link in this December paper, that in principle it believes into the ability of the private sector and that it sees certain conditions, you know, for when the public sector here in the form of the central bank needs to step in. This again being the vanishing of banknotes and the failure maybe of the European industry to provide a pan-European payment solution, but again, more with citizens in mind.
Do you want to answer, Philipp, or?
Yeah, of course. Yeah,
Please, go on.
I think in general we would not disagree here. Maybe for the audience to give a little bit of a structure, you have multiple types of digital programmable money, and if you talk about money, then it does not necessarily need to be the euro. Then we would call it digital currency. So for now, I would like just to explain it a little bit, talk about digital programmable money. And then on the left-hand side, that's how I typically view it in terms of like this kind of tree. You have like central bank digital currencies. That's basically payment infrastructure created somehow by the central bank. And there, typically you distinguish between retail CBDCs and wholesale CBDCs. That's a general distinction. The word retail is a little bit misleading, but it's still used because retail is not just including private individuals like us, but also any company out there. That's retail. And more and more, some people think that like some kind of hybrid CBDC could be interesting in terms of the retail variant, such that, for example, the central bank is creating the euro, but then it uses the existing banks and financial intermediaries to disseminate the euro to the population. That's basically typically thought in the literature right now. And then on the other hand side, you have such digital money approaches where private organizations are issuing the money. This could be, of course, banks. This could be companies like PayPal. It could be companies like Facebook's Libra project, in case it's the euro, right? But also it would be possible that such organizations are issuing money which is not the euro. And this would then be approaches which some of you guys might have known. That's basically something like the DeFi, decentralized finance projects, such as the DAI currency coming out of the MakerDAO network, right? So this would be mostly, you would call it money, but not a currency, because it's not the euro, but it might still be stable. So that's are the typical three areas which we are talking about. And I think we need to define what we are talking about. So to quickly summarize, we have the central bank digital currencies where the central bank is really acting. That's what's happening, for example, in China these days. Then we have these, then we have the issued euro, but issued by private organizations, for example, PayPal, Facebook, Libra, and so on. And then we have the digital money, not necessarily the euro, which could also be interesting coming from the decentralized finance area. I think that's basically the three categories I'm typically thinking. And I think we, Mr. Bindseil and I think we mainly agree here that that maybe the central bank has the task to somehow provide the euro in the last instance. But the question is, who is distributing the euro? Is it basically an app which is directly connected to the servers of the central bank? That would be the direct CBDC, like in its pure form. Or would it be better to have like this kind of hybrid mode where you have existing banks, you know, like in Germany, Sparkasse and other ones, existing banks which are taking the euro from the central bank and distributing it via online banking to us as human beings? And I think quite much goes into this direction where we have this two-tier mode, because otherwise, if you would not do it, then you would have quite strong disruptions on the side of banks, because you would take away their capability to give credits away. And this has indeed some very, very strong implications for the financial sector. You cannot do this overnight. Of course, that's something which needs to be done, if needed, over years or maybe decades. And therefore, on the CBD side, in case the central bank should act, then I think this hybrid model, this two-tier model, is the one which is currently discussed, and I think it's the right one to be discussed.
Okay, can I say answer one time, Philipp? I mean, I agree with everything, but I think we should not. I mean, that the banks are the distribution channel for CBDC doesn't reduce the effect of CBDC on their balance sheet. No. So I think the fact that they would distribute it doesn't help to address the financial stability concerns or the disintermediation of bank concerns. And the same, I mean, also you mentioned beforehand that you see one big use case for international payments, and that you would see the entire world being able to access Euro CBDC. As you know, everybody would be allowed to access US dollar CBDC issued by the Fed and so on. But I mean, here we have, of course, another recipe for financial stability challenges, because international capital flows could be gigantic, no? In particular, in more vulnerable countries. You know, if you look at, I don't know, the whole of Africa, or, you know, even a quite, you know, advanced economy like Turkey, once, you know, it gets destabilized financially, the potential flows into Euro CBDC could be quite gigantic, no? So capital flows, I mean, there are lots of financial stability issues that, in my view, one has to control in some way by, at the end, being able to control the quantity of CBDC. And I mean, in my working paper, I've made the proposal to have a tiering in another sense, I mean, an interest rate tiering, where European citizens and my corporates have a certain amount of relatively attractively remunerated CBDC, but that global users or non-registered users or, you know, would have a non-attractive remuneration, so either zero or negative, so that, you know, they could still use it as means of payment, but not as a store of value. So I don't think we want to offer Euro CBDC as a store of value to people in Kenya, because we don't want to disintermediate the Kenyan financial system. We don't want to an enormous Euro system balance sheet of 20 trillion euro. So I think we need some mechanism allowing for CBDC to be used as means of payment in a very broad sense, but controlling that it doesn't become a large store of value. I think that we cannot avoid to find solutions to that.
Yeah, I would agree here. Well, I'm not sure if Kenya really would like to have the euro, because they typically prone to use the US dollar right now. So they are, US guys are doing exactly this. But I would also agree. I would love to have the possibility to use cross-border transactions, which are settling more or less in real time. So sending money away from right now, 8 minutes after 3 o'clock, and then the money arrives 5 seconds later in South Korea, because I might be an export-oriented company sending machines. I want to have my money back, and then the money should not travel 2 weeks, but rather just a couple of seconds, if possible. I think there is some value here. Then we also, from the retail perspective, what does make sense from an industrial perspective is that automizing money flows with smart contracts. That's, for example, credit computations, interest computation, escrow agents. There are quite many examples out there where the programmability of money could really make sense. And this really gets exciting when you suddenly have, and that's in my mind one of the key points, this really gets exciting when you have at some point of time a DLT platform where you not just have the euro denoted, but also other rights as well. So think about securities. You have one platform in the area of DLT. You have securities listed there. Some people would call them security tokens. Other people would call it the security of the future, because the Daimler stock, for example, Siemens stock, they will be denoted on blockchain at some point of time. And then on the very same system, you also have the payment mechanism like the euro, because then you can switch between euro and between the Daimler stock. That's basically investing or divesting in stocks. You can do this exactly in a couple of milliseconds, because all these different silos, you know, like the silo of stocks on the left-hand side, the silos of payment on the right-hand side, they don't need to be reconciled, but rather it's all integrated on one platform. And I think that's basically something where we should also discuss. It's not just bringing the euro on one single DLT platform, but it's also empowering the DLT platform such that you can also have other assets there as well. It can be any kind of rights, it can be any kind of assets, it can be securities, and then it gets really exciting. That's, by the way, the platform Libra seeks to build. It's one worldwide DLT platform, ideally with multiple assets on top of it. That's massive, and therefore, if we talk about CBDCs, ideally, we should also keep in mind that on the same platform, not just the local currency should run, but also other assets as well, because then you can do atomic swaps. That's basically trading more or less in real time, and then you get enormous efficiency gains for securities trading, industrial processes, digital transformations of all kinds of industries, and so on. And I think sometimes that this part of this discussion is sometimes being lost, because very often people in banks, for example, they focus on the euro payment. People in stock exchanges, they focus on the securities, and these domains are very often not really bridged. But if you are able to bridge them, that's exactly where like dramatic efficiency gains can be leveraged.
I have no direct further reply, let's say, to Philipp. I'm fine with all he said. So I don't know, Robert, do you want to change topic or?
No, that's, I mean, first of all, great that we have some agreement with the ECB. It's always good to have you on board. I think we discussed a lot of opportunities now, and that's obviously important, and it's always great, and innovation is something we should always keep in mind and push, but I think we should also keep in mind that with every opportunity, there might be also some risks, and we don't want to be, you know, blue-eyed and just pretend that everything's great and there's no risk on this. You mentioned some of them already, Ulrich, and also Philipp, and I think it would be also worth to quickly dive into what the ECB considers risks with having a digital euro, like Philipp outlined it, and then maybe let Philipp comment on the views of you, and that's it.
Okay, no, I mean the one risk or challenge is obviously to sort out the technology. I mean, to design it in a way that it is efficient, flexible, secure, and then can be that let's say private sector can on top innovate in the least constrained manner possible. So, you know, this is a huge project, no doubt. It's not, I don't think it's trivial. I mean, it's all feasible somehow, but it's not a trivial project. So, you know, we at the ECB, we are running our infrastructures. We have T2, T2S, and I mean, so running infrastructures is serious stuff, and CBDC would be a huge thing. So it's to be taken seriously as a project, definitely. And then the risks, I mean, that economists have in mind, that's what I already touched a bit. Those are the risks in particular of disintermediating the commercial banks. I mean, some people outside the central bank would say this is great because anyway we should have a sovereign money system, how they call it, where banks cannot create deposits any longer and so on. But you know, central bankers wouldn't subscribe to that. The financial system is complex. I mean, we believe in the decentralized organization of the economy, including the financial system. So we wouldn't want to see the central bank balance sheet balloon and take over, because you know, we don't only have a liability side, that's the easy part, but then you need to match it with assets, and the ECB would become a large-scale asset manager instead of the banks. And again, I mean, me personally, I believe into a decentralized approach to credit provision. So that has to be controlled for. And again, I think the solution is make CBDC a means of payment, but don't let it become a large-scale store of value, because the ECB is not the investment intermediary of the economy. This is for others. And therefore we need one or the other tool to control for that. I mean, and that also then applies for the kind of cyclical disintermediation, when you have a stability in some, you know, area of, let's say, the banking system, or in the international context in some countries where you could access Euro CBDC and everybody, you know, wants to flow into, I mean, shift money into CBDC. Again, you need to be able to control for that. And I think this is feasible. I don't think it's an excuse in itself not to do CBDC, because you can solve it. But okay, it adds also to the complexity of the overall project, because you cannot, I think you cannot escape from having, I mean, anyway, probably you should identify the holders of CBDC. I mean, at least for domestic users, I mean, at least domestic users. And when you identify the holders, then you can assign either limits to the holdings or a tiered interest rate system. I mean, if you think about CBDC circulating like banknotes, where really, you know, anyone not registered can hold a banknote, then if you want this for CBDC, I think this is only possible for a CBDC which is less attractively remunerated. Okay, then it's another tension, of course, is the one between anti-money laundering and counter terrorism financing, and on the other side, the desire for anonymity. And here I would say the good news is with CBDC, you can in principle program everything, no? I mean, ex ante, you are not constrained. You can imagine any system that reflects your policy preferences, yeah? And here we had this paper, ECB paper in December 2019, which was, you know, suggesting a solution where you can, I mean, you define a threshold for the size of payments or for the cumulated total volume of payments by an individual within a certain period, from which on the payment data would be provided to a central point somewhere, no? A central, maybe a separate agency, separate from the central bank. And this would then look at the data and do the necessary AML, CTF compliance checking. It could also be that some payments have to go ex ante to this place, you know, to be checked before they can be released. So, I mean, that is possible. So anonymity could be preserved because it would be, you know, programmed in a way that messages on payments are only sent to this central place if they reach a certain threshold or fulfill some criteria like cross-border payment. I mean, Philipp was mentioning the potential progress we can achieve in cross-border payment. That's true. Of course, one must admit that the extent of competition and the efficiency is also, let's say, or has been limited by regulation, no? And here again, for cross-border payments from certain countries, you have a heavy, you know, AML, CDF regulation. So, and some banks, you know, faced huge fines. So of course, all this, you know, is not inviting competition and efficient processes. So if, you know, we cannot compare the current reality with a fictitious future where, you know, we would have not all those checks, because they would also have to apply it to a central bank digital currency, you know. So of course, there you can also think about very efficient ways, you know, automated checks. And that's fine, that should be done then. But let's not forget, we could also think about improving the efficiency of cross-border payments now, because a lot of the inefficiencies relate to things which will not go away with CBDC anyway.
Maybe I also emphasize some of the risks and disadvantages. But I think Mr. Bindseil or Ulrich has had more like the perspective of the macroeconomics, you know, like pointing towards financial stability. And I think, yes, of course, that's a risk, but financial stability is also a risk created by many other things, of course, and not necessarily just by CBDC. Actually, I would like to highlight some other things here. I think the The main risk is that we are not understanding the topic quick enough and that we are not doing enough in terms of education, because most of the people who might need it, like let's be very clear here, machinery companies in all over Europe, for example, they would like to digital transform their entire business, and they don't even know what's possible yet because they are just not educating themselves. Nobody tells them. They are often like governed or led by very old CEOs, like people 60 plus. That's not digital natives who would have the capability to really understand what's going on here. Sorry to be so honest, but I think education is missing with senior management and CEOs, especially if they are getting older. Then the likelihood that they really understand blockchain and not just reject it because it's some kind of cryptocurrency thing is very, very, very high. So therefore, missing education is, in my mind, one of the biggest bottleneck we currently see here, because it leads to the fact that people simply don't understand the benefits, don't understand the risks, and then don't really take actions and also produce budget. Then secondly, I have the feeling that that's a very, very big risk, that we are just too slow in Europe, because China is really moving very fast. In China, their system is already more or less live in first cities, and first employees in China already have received their wage, their money, in terms of the digital local Chinese currency. So it does work in first occurrences, like first couple of people really get money, they get their salary in terms of their digital currency. That's unbelievable from a European perspective right now. And this is basically created and driven by the central bank in China. We know China is working top down. Some things there work then faster with other disadvantages, that's pretty clear. But I would say so that China right now is 5 or 6 years ahead of Europe. Yeah, that's the truth. People don't really want to hear this. People very often don't believe it, but I would say that China right now is 4, 5, 6, maybe 7 years ahead in terms of implementation of digital currencies. And therefore, I think efforts in Europe needs to be strengthened, much more needs to be happen. But the question is, who actually is doing it? Should the ECB take action? Maybe yes, but ECB is basically not an innovative startup like PayPal, which is simply creating some kind of solution for the market. There is no test bed with the ECB where you can easily explore how this really works. That's not payment infrastructure on behalf of a central bank. Then who else could do it? Would you like to have this with banks? How I have now understood banks is that they will not be able to do it. They have other issues, negative interest rate, inefficient processes, not feasible to really do consortiums where it works. In Germany, we have PayDirect. This dramatically failed as a prime example why consortia don't really work. So I would also agree here that private banks also cannot really do it. Would it be possible to have one bank doing it? For example, Santander in Spain, BNP Paribas, maybe LBBW in Germany, or Commerzbank? Basically, yes, but then you don't have the payment across multiple financial banks, which needs to be possible. So in case one bank takes action, this is also not sufficient. So this is also ruled out. Then you have a couple of startups putting energy in this digital payment or digital euro area that works. It's legally compliant, but of course, in case you have European startups, they are very often underfunded, so they cannot really get traction so fast. So again, in my mind, this is also not the best possibility, and therefore I'm a little bit stuck with answering the question, who actually should do it and how to get this moving. And maybe in Germany, the Bundeskanzleramt, like the office of Angela Merkel, maybe they should take action and basically bring together on one table both banks and also industrial corporations, because the latter one, they are using it. Or on a European level, this would be the European Commission, bringing again together the financial side, like the ESMA, the banks applying it on the one hand side, and also those people who are using the euro. That's basically the retail area, that's the industrial sector, because, and that's the last point I would like to make, I feel that the discussion is missing between those people who are basically offering the euro, that's the banks, and those companies and actors out there who are using and deploying and applying the euro, that's the entire retail sector and the entire industrial sector. There is not enough discussion happening between these two huge silos, you know, like the industrial silo, the retail silo, and the financial silo, even though their associations are doing a quite good job, but the association of the banking sector, they are again like siloed in their banking domain, and the associations of the industrial sectors, they are again part of their silo. So again, there is nobody to bridge these two worlds, and I think this needs to be coming from top down. And on the European level, this could be the European Commission, to be very honest, and within one country, this could be, I don't know, Angela Merkel's office, or in other countries, the similar thing. I think this could make sense to really foster education and also bring it on the top of the agenda. And then the last one who actually could do it is Facebook's project Libra. I think this is quite well known. I actually think that it's a fascinating project, especially with their renovation towards version 2. But also in my mind, they made a horrible mistake, because they initially associated it with Facebook. And now for some reason, if I say the word Libra, I have the Facebook logo in mind, and I have Mark Zuckerberg in mind. And that's the wrong association for such basically a good project, which is built as an association where ultimately Facebook will only have maybe one member count among 100. So Facebook is not dominating this on the long run, but for whatever reason, they made this very, very bad mistake in the beginning, associating very, very strongly with Facebook. And this put it somehow in a bad, domain. And now I think it's because of this privacy stuff, we all know this. And therefore, I think we should be more open towards Libra and really investigate, does it make sense? Does it make sense with the side condition that Facebook cannot use the data and cannot integrate their data with payment data and so on? There needs to be some kind of Chinese wall here. This needs to be enforced by governments. This is all fine, but I think we should be more open towards Libra, because from a technical perspective and from a governance perspective, it's really good thoughts what they are trying to build there. And I could imagine that by 2021, that's maybe 1 year from now on, we have two main CBDC systems out there. One is the Chinese one, and the other one is the Libra one. And therefore, we should not disregard this opportunity, especially when Libra is playing according to the rules, and also is complying with the existing currencies, euro and data privacy rules as they are. But this needs to be enforced against Libra. That's absolutely for sure.
So as a last round, maybe Ulrich, any final statements before I would like to give the floor to the audience? Thanks for the statements, Philipp, by the way. Any last thoughts before we open up?
So just maybe to say that we wouldn't call Libra CBDC. I mean, it's a global digital currency which would be usable for cross-border. I mean, but it's the idea in the white paper number 2 of Libra is still the idea that Libra would be fully backed by a reserve, which would be composed of high-quality government bonds and a bit of deposits with banks. So in this sense, it wouldn't really be CBDC, no? I mean, then the white paper also contains the idea of full backing with central bank deposits directly. And then, you know, this is still not CBDC. This is what the IMF is calling synthetic CBDC. I mean, central bankers would still not call it CBDC, but of course, the full backing by central bank money would be something new. But this is not the scenario for Libra. Libra will be backed by secure other financial assets, no? So it wouldn't be CBDC. But I mean, of course, it has some similarities, you could say, with a global CBDC, which would be distributed via a platform similar to Libra. So yeah, there are some connections.
Yeah, no, I think you're right. I should have not said associated CBDC with Libra. I should rather have said like digital money, and even more so digital euro. You could have the euro on top of Libra. That could be potentially interesting in case that the rules which are there are complied with. Oh, Robert, you have to unmute yourself.
Apologies, you're right. I just wanted to say, I would like to use the polling that we did during the webinar and share the output with you. So we ask as a first question, should the digital euro be retail, wholesale, or both? And the majority of 64% said it should be both. So I think there's quite a big interest. 21% want the wholesale digital euro and 21% want the single retail euro. I think that's not so surprising considering what we just discussed. What's probably a bit more surprising is, or maybe not, is how long do you think will be the time frame till we see a central bank issue digital euro, and the majority thinks it will happen in 2 to 5 years, so it's like 60%. The second biggest group says nearly 28% say more than 5 years from now. And then it's a close call between in a year and never, both around 5%. So I think the time frame that Philipp outlined with China being ahead 5 to 7 years, adding 2 to 5 years, which means that we're a decade behind the Chinese, if that's true. Curious to see if that's really the case in the future scenario. Then a third question we ask is, in your opinion, what's the most important benefit of digitizing the euro? And with a close win, payment efficiency with 46% basically took the first place. Is this something that is maybe surprising to any of you, considering that the second most important aspect is considered to be programmable money, being programmable money? So is this really the key aspect, in your opinion, about digitizing the euro payments efficiency?
I would say that right now, from our today's perspective, it really does make sense because, well, in case we are transferring euro from me to you, Robert, the money is quite quickly underway. But of course, it could be even more quicker, especially if it's cross-border, and especially even more so if it's outside Europe. And I think, actually, I think the topic programmable euro, there is so much potential in it, but even myself, we can't really envision what kind of crazy business models are behind there, because it's such an untouched topic so far. What can you do with unprogrammable money? That's really difficult to envision and to really grasp it, because it can encompass, you know, like entire industries, you know, and entire countries, you know, entire logistics, entire industry 4.0 and so on. And therefore it's difficult to really grasp this term programmable money, but there is extremely much behind. I think we will all discover this in the next 12 months, maybe.
Okay, thanks for that. And then as a last question, we ask, what is the biggest challenge for digitizing the euro? And not so surprising, probably, financial stability concerns took the first place with 36%. Second issue is education, as Philipp outlined, he emphasized it a lot. 24% think that that's the biggest issue. And then on the third place, cyber resilience took third place with around 15%. And maybe interesting that privacy and technology, the underlying technology, both around 10%. AML risk is basically not being seen as an issue for digitizing the euro. So that's the polls. So I would like to open the floor now to the audience. We have already some questions here, so I will invite now the first one, Jacek Figua from Billon. So please, Jacek, I will put you on the floor, so please ask your question, and ideally, if you keep it to 10 to 20 seconds, that would be great, so we can get an answer in time.
Hello, everyone. Do you hear me?
Yes, perfect.
Yes, thank you. So very short, it's not really a question, but I would like to invite you over to Poland, where since beginning of this year, we are operating under the KNF regulations, the e-digital zloty, Polish currency. And we have been experimenting with this over 3 years before that. Proving what you just was saying, Philipp, that so many different business models are made possible when you start to transact peer-to-peer or company to individuals, and you have so many opening different models that we are so much surprised. Very much interested to actually follow up on this topic. Last thing, couple of weeks ago, RBI, so Raiffeisen Bank International, announced also the RBI Coin initiative, which is also an interesting initiative, which they do together with us. Worth looking at. Thank you.
Thank you. Then I would like to give the floor to Lucas Repper. I think it's Lucas Repper, I hope, because it says Repper Lou, so I assume that's him. Lucas?
Can you hear me?
Yes.
Yeah. So, hi, Ulrich. Ulrich, I wonder whether you could shed a little bit light on the international dimension. So, you're a regular visitor of the G7 group, I suspect. What's the temperature with respect to other central banks? So, in particular, those that come from countries that are more similar to the way we think, like Canada, for instance, or similar jurisdictions. What is the situation there? Thank you.
Thanks, Lucas.
Yeah, I mean, Philipp has referred to China many times, so that's well known. But the countries similar to us or the euro area, I mean, here you have heard, Lucas, of this group of 6 central banks, which under the, let's say, organization of the BIS have created a group to study CBDC internationally. So I think that group comprises also Canada and the UK and Switzerland and Sweden, yeah, and the ECB, and maybe one more. But and so I think those are the willing, the interested, who you know, I mean, definitely agree on the conclusion that we need to study this to not be behind the curve, to be prepared to launch it when we see a scenario where it becomes obvious that we should do it. Yeah. So I think there is a group of comparable central banks who are as interested as we are. And I think the Canadians in the area of payments have a tradition of being quite dynamic. So yeah, they are part of this group. But you know, the Swedes, you could say the front runners around this group of countries is really Sweden, no? Who have already around 2 years ago launched a concrete project to develop a prototype. I mean, they have published various reports. I mean, they are more advanced than any of those other countries in this group in terms of the decline of the use of banknotes. So for them, really, the key motivation is to have citizens being able to use central bank money, not being necessarily exposed in such a crucial, you know, use or function like payments, not being exposed maybe to oligopolistic private players, not having public money, central bank money as a fallback solution. I think that's how I would summarize the Swedish thinking, and they are most advanced because they have seen this incredible decline of the use of banknotes.
And is there a need for the central banks to agree on a joint approach to this, or could there also be one of the central banks in this Basel group that goes ahead and does it first? And would you then see something like a first mover impact on the market that people would pivot to this CBDC, whatever that CBDC is?
Yeah, I mean, one topic which is explicitly mentioned in this press release that was published when the group was founded was to look at interoperability issues. And of course, you know, I would see this pragmatically. If you have one standard, if one moves ahead, and go through the pain of thinking through every detail and deploying solutions, then yeah, let's be pragmatic and let's not reinvent the wheel every time. So I mean, yeah, I would say we can only encourage interoperability and an efficient reuse of whatever elements are convincingly developed by others. And one of the purposes of this group is to ensure that all this takes place.
Thanks, Ulrich. If I may give the floor now to Blanca Zutta from the World Trade Organization. So Blanca, the floor is yours. Thanks, Lucas.
Pleasure.
You unmute, Blanca.
Yes. Hello. This is Blanca. So yes, my question relates to current negotiations on custom duties on electronic transmissions. You know that at the OECD level, there are current negotiations if countries would tariff electronic transmissions on services, but also financial transactions. So my question is, what would be the potential impact of a Euro CBDC or any other type of CBDCs on this current debate on custom duties on electronic transmissions? And what would be the implications also for government revenues if they impose the use of CBDCs to developing countries? Thank you.
Thanks, Blanca.
Should I take this one? Yeah. Yeah, thanks, Blanca. I mean, not an easy question. My a priori answer would be this should not make per se a difference. No, you know, whatever rules, regulation, taxation, and so on is considered for services or for payments or for financial transaction can also then be transposed to the world of CBDC. So my answer would be per se, I wouldn't see a difference. I mean, many innovations or many things we should work on which improve the efficiency of cross-border payments or service provision. I mean, they should be done, they should advance anyway, and the world with CBDC will then also benefit from them. But I wouldn't see such a specific particular impact of CBDC on those important debates and the progress reached there.
So what would you recommend, for example, the WTO should do to adapt to a future world with CBDCs?
I would see CBDC as one potential future contributor to efficient cross-border payments, no? And efficient cross-border payments is a very important topic because, you know, you have all those remittances being paid, you have corporate payments, as Philipp highlighted in particular. So there's a lot of, you know, you could say money wasted because those payments are not efficient. And in a world with more efficient international payments, I mean, world trade, the payment of remittances, everything, you know, benefits. So that's where I would see this coinciding with what I would believe are also objectives of the WTO.
Okay, thank you.
Thanks, Blanca. I give now the floor to Kevin Spur from Association of German Banks. Kevin, floor is yours.
Yes, thanks. It's Kevin. When we talk about Libra, we talk about a fully backed currency, like with cash and bonds. And also when we talk about CBDC, implicitly we always talk about fully backed CBDC. Could you also imagine like, let's call it a bank money euro, which is just partly covered and which could, and where you could also make credit, like in our actual system, in our current system. I mean, of course, there are stability issues, but the big advantage is that it would integrate in our current financial system. So could you imagine such a bank money digital euro, and under which circumstances? Thanks.
Sorry, Kevin, can you repeat the exact balance sheet construct that you have in mind? I'm not sure.
Well, in our current system, like bank money is not fully covered by the central bank. So banks can give loans and yeah, in German Kreditschöpfung, I don't know the English term. And actually, you could also imagine it for digital euro, couldn't you? That the digital euro is just partly covered by bonds or cash and not fully like in the current models. And my question is, could you imagine such a bank money token and under which circumstances, like a partly covered digital euro? I hope it's clear.
I just had to get electricity for my.
Yeah, you could imagine a vehicle. Those Horizon Libra, no? Digital.
I think we're losing you, Ulrich.
Digital means of payment. And this is, okay, sorry. Do you hear me? No? Do you hear me?
Yes.
Not really.
Yes.
Do you do it again? Okay. So Libra, you could say, is an attempt to have a global digital currency, but not based on the issue that you need a reserve, which is liquid, because you need also something liquid to be able to pay out. If there are outflows, you need to be able to serve the outflows. And here I mean, you could imagine a mixture, where also on the asset side of this vehicle, there could be partially deposits with central banks. There could then be partially, yeah, bonds. It's the general problem, I would say, of balance sheet management of any bank, that if you have liquid liabilities, then you have better liquid assets. So I wouldn't see for such a vehicle a big loan portfolio on the asset side because of liquidity mismatches. I mean, banking is mainly about that, no? But you could imagine an analogy, a vehicle therefore issuing digital money, where you would also have this issue, and of course it has to be managed carefully to keep the credibility of this vehicle.
Does this answer your question, Kevin?
Yes, yeah.
Okay, perfect. I have one question. One of our colleagues here at the University College in London wanted to ask you, Ulrich. In the ECB working paper from January, you suggest that Herring and others are strongly preoccupied with privacy. Do you think that it would not be possible to design retail CBDC in such a way that privacy can be achieved without third-party trust? That way it might, it is like it is with banknotes. And if not, then what options will ordinary people have for private payments? You're on mute.
No, that's a very good question. And I mean, this is really what the ECB looked at in this paper published in December 2019 called Exploring Anonymity in Central Bank Digital Currencies. So one can achieve anonymity. One needs to reconcile it with the need of AML CTF the regulation, yeah, and you can program it in a way that reflects your policy preferences. You put in there some parameters. What is the threshold of payments from which it needs to be reported to some central agency, which then checks the data? There can be a threshold for ex ante checks, for ex post checks. In principle, everything is possible. Of course, I would still say any digital form of money, you could find it less trustworthy in terms of anonymity than banknotes or gold coins. That's true. No, I mean, if you can always mistrust, or you can always see a possibility or whatever access data. But I think as far as one can go, would be possible by programming such a threshold for reporting money, and the threshold makers.
Okay, thanks for answering. Are there any other questions from the audience? So we had so far everybody that raised their hand. Is there anybody else that always wanted to ask one of the two gentlemen a question about digital euro? Okay, that's it. Then just as a last question to you both, we discussed now, you know, the timeline, the risks, the opportunities, and positions of central banks. We tried to shed some light on the global perspective, privacy. So we covered a lot of ground. Keeping that in mind, and I mean, you've seen the polls and what, in this case, the majority, for example, in this webinar things. And I ask you now, Ulrich, what is your personal gut feeling, because maybe there's no official position of the ECB yet, but where do you see, or when do you see such a digital euro, in whichever form it might come, happen in the next years? Is this something that you will draw the magic hat and it will appear at Christmas because you're just so secretive about it that nobody knows? Or is it something that we should rather be cautious and expect in the next 3, 4, 5 years? Or never? And you're on mute.
I mean, you have to distinguish the whole life. So I think a go live takes years. I mean, let's be realistic. The Chinese have been working on this for years. I think the Swedes are, you know, have worked on this for years. So maybe, as Lucas was suggesting, we can be efficient by reusing technology, by benefiting from what others have done. But my guess would be, if the ECB Governing Council decides to issue CBDC and the legal requirements are fulfilled, then it takes some years to have it go live. So I think it will, I mean, if you ask me, conditional on the conclusion that it will be done and will be done relatively soon, I think 5 years.
Okay, thanks for that. Philipp, any last questions or statements?
Yeah, maybe two aspects here. I think we honestly need to focus more on education, and I think more efforts, more energy, more money needs to go into the area of educating people about digitization stuff, blockchain, and so on. And I can be very specific here. We need to have more IT knowledge with those people who are deciding. We have I'm a business guy myself. I didn't study computer science, but still we have too many lawyers, too many business guys, too less IT knowledge in decision-making positions. That's what brought us here. And we just heard the facts. China is a couple of years, 5, 6 years ahead of us. And I think we should also honestly ask ourselves in Europe how this could have happened.
Thank you, Philipp. We just got one last question from Ellie Simon, so I'll let you on the stage. Ellie, floor is yours. You're on mute, by the way.
Okay, sorry. Yeah, sorry. The typical trap. Question for you both here. Ulrich, you mentioned the 5 years time frame, and Philipp was very kind of adamant that we are way behind China, and nobody is talking about the digital dollar, and knowing how America could play all of a sudden with almost, it wouldn't be even surprising that would be ready within the next 2 to 3 years. And I think Europe is going to stay again sitting on this chair and having done all this work, having done all this kind of preparatory work, and still be sticking to the 5 years time frame or not reacting to America.
Yeah, what should I say? I think you're right. I would encourage you that whatever you have just said should be directly printed on newsletters in all 27 European languages in any member state, because it's the truth. We should do much more. And well, you know, we as a university, we not even got our money from the government. We have to fund ourselves with projects from the industry and apply for public grants, because even though we as university do not get money for this, we need to earn first money by projects and then spend it on education. This should be different, and still we are #1 research institute in blockchain in Germany. This should be honestly different. More money should flow to measures on how to educate people and so on. Therefore, I'm actually, I agree with you. I think in the US, not too much happened so far on a digital euro, but as we all know, the USA, they can quickly turn around and be very energetic, and maybe then have their solution ready in 2 years' time. You know, that's what the US showed us very often, that they can be very quick if they really want to have it. And therefore, once again, we really need to speed up our efforts, and more energy, more budget, more knowledge needs to go into this area. And this starts with openness, education, and especially more IT knowledge. That's my personal opinion. I know that many people would disagree here and say, yeah, it's okay, and so on. But I think it's not enough what we are doing.
Ulrich, you want to respond?
Can I defend a bit the Europe here? I mean, we have in the area of payments, we are not so bad. No, we have achieved also big things. We have achieved in the back end, no, in the technology back end of payments, we have achieved SEPA. We have achieved TIPS. No, TIPS is an instant payment platform run by the Eurosystem, where I think many central banks globally are looking at that and are even admiring TIPS. So, you know, not everything in Europe is lagging behind in the area of instant payments run by central banks. We are even, I would say, amongst the world leaders. And others are you know, looking at what we are doing and are potentially copying it. So let's not end on a too negative perspective in terms of our ability to innovate. And also, I think in the area of payments, Europe is not so bad, yeah.
So maybe on this positive note, we end here. Thank you both for taking the time. I think we could have this discussion going on for another hour or two, or maybe even longer, because there's just so much to discuss. And we really appreciate for you taking the time, Ulrich, because, you know, one of the reasons why Blockchain for Europe exists is to bring together, you know, like industry, academia, and the policy environment, and central banks, and you know, and those important players to actually showcase that, you know, sometimes you just need to bring them in a room, so to see that they both listen to each other, hear what the other one says. And the education bit that Philipp says or mentioned, we also see this as paramount in our work. So we will keep doing this, and every support from the ECB by attending those events and joining and debating with industry and others is highly appreciated. And I hope we can do this in the future as well, because there's still, as Philipp said and others mentioned, loads of stuff to be done. I think the mindset is right. It's just now that we have to push a bit harder, every one of us, industry, regulators, academia, basically everybody, to make this a success story. And on this note, we will have in 2 weeks another event on a probably equally interesting topic on convergence between blockchain and AI and the future of the digital economy, with Bindseil Galvis, who's head of unit of DigiConnect in the European Commission, to discuss with the CEO of Fetch AI this important topic. And further down the line, so we have on a bi-weekly basis events or webinars on issues relating to blockchain. Stablecoins will come up again, crypto assets, cross-border payments, DeFi, and applications and sectorial, like mobility, healthcare, and so on. So please stick with us, join us, help us educate and bring together the people that work on this. And if you're not doing that yet, please follow us on Twitter and LinkedIn. And thank you all for joining. I think we had a great discussion. And if you want to stay in contact with them, Ulrich, I think, has a public mail. If you want to reach out to him, Philipp, the same. And if you don't find them, please drop me a mail. I will try to connect you on a reasonable note. So thank you all, and have a good day, and see you next time, I hope. Thank you both.
Thanks for the initiative, Robert.
My pleasure. Thanks, Ulrich.